later.
So Joe's ultimate goal was to either minimise or completely remove the death benefits tax. The simplest thing for him to do would be to withdraw it all out of superannuation. If he was over 60 and retired, he could actually draw that all out tax-free. So that's one option, where he could just pull it all out and invest it in his own name. But obviously the biggest disadvantage of that strategy is that this money is now invested in his own name and therefore taxed at his marginal rate. So obviously that's not the best outcome for him. But one strategy that enables him to, one, minimise the death benefits tax, but also retain that money within the very tax-effective superannuation environment is a withdrawal recontribution strategy. Now what this basically involves is still withdrawing money out of superannuation, which for Joe, assuming that he's retired, he's over 60, he can pull that money out tax-free, but instead of investing it in his own name, he then recontributes that back into superannuation as a tax-free or post-tax contribution. So it retains that tax-free status within superannuation. Now, because he's under 65, he's got the capacity to recontribute up to $150,000 per financial year, but he does have the capacity to bring forward 2 future years of contributions because he's under 65. So he can actually contribute up to $450,000 as a one-off lump sum in one financial year. So this strategy enables him to withdraw $450,000 and then put it back in again as a post-tax contribution. So the outcome of this strategy is that the taxable and tax-free breakdown, which was previously 50% for both of those two components, you can see here that by implementing that strategy, he's able to increase the tax-free component to 72.5% and reduce the taxable component to 27.5%. So the overall death benefits tax in this scenario is $45,000, which compares to the plus $80,000 plus tax liability that his beneficiaries would have incurred if he did nothing. So the overall tax saving here is in excess of $37,000.